Okay, folks, I'm not messing around today. I've got the headsets on so we don't have to screw around with the sound. So let me know if you guys are hearing this cool. All right? Any weird stuff, echoes, all that good stuff. Thank you, Sebastian. Appreciate it. I really do. Same, Jack. Everything's good, right? Awesome. Love it. We don't have to screw around with sound today. Awesome. We'll let the room fill up for a few more minutes. We'll get going. What time is it? We get going in about 2 or 3 minutes. Yeah, I'm going to jump around some screens, just test them, make sure everything's working. So here I am, full screen. Make sure this is getting sound. Looks good to me on my end. Just double checking some screens here. Just making sure we're seeing everything, hearing everything. Let me know. Yeah, it's Friday. Unbelievable, man. I tell you what, I start off on Sunday night and wake up and on Friday morning. That's a joke, and but it's pretty true. Okay, Zoom one, we're working on this. Yep, awesome. Thank you, Jay. Zoom one, everything looks like it's working good here. Okay. Yeah, we'll just go to the screen, watch the futures trade for a few minutes. Look like they're trying to rally them again here. Go through some details. Yeah, thanks, Tristan. I am connecting. It's pretty amazing, this community, and never done anything international like this before. It's really pretty cool. Always been domestic kind of guy here in the U.S. Wow, look at the futures running up here, getting a pretty good bid all of a sudden. We're about 4 handles off the highs of the day. So uh, enjoy watching for just a couple minutes. When we get we'll let the room fill just a touch more, and then we'll go and start talking about some things I want to talk about today. Okay, folks, we got about 100 folks hanging around. We'll pick up some more as time goes by here, but just want to thank you all. Last night was a nightmare for me. We'll do some pre stuff before I get going, but I had my Ethernet card crash on me. I'm running around the world trying to find something to fix it. Found a remote Wi-Fi card that I have because the computers I have don't have Wi-Fi. So we're on Wi-Fi. So hopefully that works okay because all these boxes are usually hardwired. So anyway, it was quite the ordeal last night. The cameras were gone. I've got some new lighting system that wouldn't work. I mean, it's just. And I thought I had this thing handled. I'm actually in the process of getting better cameras as well. But anyway, enough about me and what it was like last night. So let's talk a little bit. One of the things that I discussed in the video last night, as brief as it was, is that Fridays have been doing this in that they come in weak and then they rally and get a reversal. I mean, that was the script for today. And in fact, we'll go through some of the numbers and the market grid here in a few minutes, and a couple things that happened. But you know, as disastrous as it looked like this morning after the Fed announced they're taking away some of the Kool-Aid from the banks, and I think what people, my thought on this morning when I saw that news line come out, I was watching the futures pre-market, and they just crashed them out. That's when they started the selling. And my thoughts on that was that, you know what, people are going to realize the reason why the Fed's taking that away is because they don't need it there anymore, and that it's actually a positive sign, not a negative. And that's exactly how this thing has ended up. Not that we're having, you know, we're up 11 handles on the S&P right now, so it's not like it's screaming away. But compared to where it was, we had a low of 38.75. And I'll just do a little pre-talk, then we'll get into some charts, look at it. We're going to spend an hour and go from there, and we'll see how things are. Um, yeah, anyway, we'll see how things unfold as we come into this final hour. And it looks to me that at least we're stable coming in here. We'll see if there's any selling. There's a lot to watch for today. And so let's go ahead and I'm going to dig into the charts here and just we'll start with looking at the SPX here and just talking about what's going on as far as the patterns here. And one of the things that I am famous for, and you folks will see this, I'll mention a number that I think we could trade down and test support. That number last night was actually the 21 period moving average. The 21 period moving average, I didn't think we'd get down that week, to be honest with you, but look at S3 on was 38.81. Let me just zoom. Can you, when I'm talking about these numbers, can you folks see these numbers on this little grid over here? Yeah, so here's the plan. We'll do an hour just talking about markets. We'll watch the close today, and I'll spend another half hour after that, and we'll do some individual stocks and talk about what you folks want to talk about. This will be just open forum, so we'll definitely go through all that as we walk forward here. Okay, but we went right to these numbers. S3 33.81. The 21 period moving average 38.88, the low 38.86.75. This is on the cash, and now we're trying to get back above that 10 period moving average, which is still up at 0.21. And last night's video I talked about, I thought it would stay above at least 0.22. Pretty good guesstimate as far as things go. I guess I know these PPMs. I live and breathe these things. So for only since 1986 or 1984 technically. So it's a very long time I've been looking at these little squiggly lines down here. And this trajectory of the 10 period moving average at 0.21 isn't great, but it's strong enough to keep the market moving, at least trying to move up there. You see we're just trading above it right now. 39.22 is that moving average, and what we're looking at here is let's see here, the last trade 39.23.25. So we're definitely back above there. Can we stay there on the close? I don't know. My interest in today's action after the dip is just to see how we can close this thing. And let's face it, I mean, we're at 39.23. The high just 3 days ago was 39.83. So that's like one good day, 2 good days being right back in there. And I was talking about, as you watch the channel every day, I've been talking about this for multiple days, where there's basically we're getting this rolling top just like we did. I'll see if I can zoom in on a couple of things here just to see if I can point this out a little bit. But yeah, right here, this area I'm showing you here was back in February. That just kind of rolled. It went into the moving averages, and we got a little weaker, and it went below those, and it actually went down to some of the key weekly averages. Let me flip this chart just for a second to the weekly so you can see what I'm talking about here. is we got almost down to the 21-week moving average. You folks may remember that, and but these trajectory lines are still very bullish as we look at the ppms on a weekly, 0.26, 0.59, 0.63. So the market's going to continue to follow this slope that you see these angles. These are not going to change. These are maintenance trend mode. So the intermediate trends go on, and this is what's driving this market. These trends are what's driving the market. When we're looking, going back to the daily chart here, when we look at that, what we're seeing is this is all the noise within the trend. So I talked about this a bit the other day, is that when you're looking at markets and if you're studying the daily charts and you get too fixated on those short-term charts, you start to see the noise, and the emotion level actually kicks up a lot because you're feeling everything that's happening. When you go to the next level, you go to weekly and monthly, all of a sudden it compresses, right? You're compressing 5 days into one bar, and 30 days or whatever, 22 days roughly on average on the monthlies. And so all of a sudden the trends start to emerge and flatten out, and you start to see things at a different level. And that's why I always go through a lot of this stuff. I try to do that on Sunday night, and hopefully won't have any weird issues this weekend. In fact, my rest of the afternoon I'm dedicating to working on a couple of new things for the videos. I also changed software yesterday for the nightly video, which was another nightmare. I actually tested it. I thought I was ready to do it. Why I would do something like that during the week, I have no idea. It was my life that got disrupted, not yours. So you guys still got your videos. And just know, by the way, that I am committed to doing these daily videos. They're like anybody's job. There are days where it's just kind of hard to do, and you get tired of it. But I've been doing daily commentary literally since 1986. I think I counted maybe 2 weeks of time that I haven't shown up. So I show up, and I'm getting to be an old dude. I'll be 69 years old this year and still going strong. In fact, we're trying to put a fun project together, so we'll see how it all goes. But the configuration here on the daily chart is trying to get back above some of the short-term trends, the longer-term trends, the intermediate and monthly. So the weekly, monthly charts are still in very robust uptrends. I've told you folks, this market is not rolling over here. To buy the dips is the thing to do as far as it goes. That's especially against these key moving averages. And I know a lot of you folks and folks out there using exponential and weighted averages. These are all simple averages. They work if you understand them. I don't care. Just a brief 20-second lesson here. I don't care what moving averages that you use or what techniques you use. Just really solidify and really make a rule set about what drives you. And that's what I show you on, from my viewpoint and my work. I've been doing the same thing over and over and over and over for like almost 35 years now. These PPMs were first developed back in 1984. So this is part of me, and it's just kind of, my life has evolved around this, into trading models, and to all types of activities. So focus on your work. If you're doing good work, I'm working on a video right now which is going to be talking about how to, just real quick, just a segue here. I'm working on a video right now is going to teach you two things: how to avoid some of the pitfalls of emotional trading, and how to use your emotions for trading. So it's really interesting. I used to do this class way back in the 90s, and it was always well received. And I was digging through some stuff. It triggered me. I was talking to one of my associates here, and we just came up, that's a great idea. So it's going to be a longer video because it's going to go into some detail, but it's something that's going to be able to really help you folks in your trading decisions. So that's really what it's all about. So back to the markets here. But the bottom line is that these markets are still an uptrend. Let's look at the futures for a second. You know, I didn't really mention it, but it's quadruple witching today. I think some of this activity that we saw yesterday and today had a lot to do with that. I really didn't bring it up a lot, but that's why when we got down to the support, as you know, I rolled over to the June futures just a couple of days ago, and there's about a $10 discount on those right now. This is the June contract. I'm going to look at the marches as they go out just real quick here. Oops. Yeah, so marches are trading. Yeah, so you can see they don't have the same type of activity right now. There's 38,000 trading there compared to the bear with me, just trying to get this thing to update. Here we go. Compared to 1.9 million on, oh, that's SPX. Sorry. There we go. Compared to 1.5 million on the June contract. So that's definitely where you want to be. Yeah, so just looking at the timeline, Wendy, I'll just try to answer your question real quick. This is a tough place. If you have money invested, a lot of our short-term strategies have pulled back into cash over the past several weeks as we've been kind of rolling through this period here. It's been very choppy and very trendless. From if we go all the way back to February, even though we were able to make a new high, there's from a short-term level, there's been a lot of noise on there. That's why I continue to talk about these charts. So, you know, the best way, you know, everything I do, by the way, is centered around something. I saw a comment on the channel this morning. A guy said he doesn't need a database, and he had these 3 basic rules. Well, we have a database because we manage money. Okay, we help a lot of money managers and now individuals manage their money, and it's about being able to watch multiple targets at once with a methodology. So it's kind of a tough question. Would I put cash here? It depends on what you're putting cash in, right? You know, there's a lot of these stocks that have rolled over, but I'm going to go to the NASDAQ next, and that's probably where a lot of the weakness we've seen right now. So the futures are what, trading 39.11 right now. I'm going to flash over to this other screen for just a second. I just want to see what that's looking like. Yeah, so we're pulling back in here a little bit. You know, we traded up to about 18, so we're back about 7 handles. So it's going to be interesting as we come into the rest of the session today. So let's go back and let's take a look at the NASDAQ. That is, this chart here is we're spending a little bit of time on. And just real quick, as we look at the market grid for today, I talked about last night that I thought we could see S1R2, and it's almost exactly what we did. S1 12,694, low 12,681, so it dipped just below the S1 number, and then rallied right into R2, 12,960, 12,898. So we're a little bit off on the high, and we're trading right at the R1 number, which is 12,865, just a touch under that right now. So we're trading within the grid. The downward slope on this 21 period moving average, I'm going to zoom in on this so we can just see this a little better here. I'm going to I just want to expand this chart out just so we can see these things here really good. I want to take a minute to unpack what's going on here. And this is, I mentioned this briefly. I think the section on the NASDAQ last night was like under 2 minutes, right? But let me just show you just a little bit more on this and what I'm seeing here and what I think is going on. And I still think this Nasdaq's putting in a major bottom here, and I'm going to draw in some things here on with the whiteboard here, just so we can take a look at what I'm talking about. So the first thing I want to point out is this cyan line, that the 21 period moving average is coming down through here. So that's more or less your trend line in this pattern, and we're coming back up. The red line is the 10, and then the green line up here, which has been a heavy resistance. We've seen 3 hits off of that 40-day moving average. So that has been the resistance. I talked about that a lot. Well, I'll bring up some numbers. That's up there at 13,201. We bounced into there, went above it a little bit, but didn't want to stay above that number. And the PPMs reflect that. So PPM 1 over here on the right is a plus 0.15. This is what I mentioned last night. We have a mix where we have a trend level down in PPM 2 at a minus 0.28. Now these PPMs, price pressure momentum, anything under 0.5 is actually a anything under 0.5, sorry, under 0.25 is a downtrend. And so what that's telling us here is that we've got a downtrend on this. I'm going to erase these lines real quick just so you can see them, redraw them in. There's a downtrend here on the intermediate trend. Now, I've talked about this. I'm not going to go into a lot of detail because we don't have a lot of time here. But I look at the markets that there's 3 internal trends within a trend. So there's even a short, intermediate, and longer term trend, even on the daily chart or on the weekly chart. And that's why I use these 3 averages. That's why we have these 3 PPMs down here below. And the PPMs, all they do is measure the percent change and first and second derivative of the percent change. So they help to develop a probability whether the market can go above those numbers. Now, it was interesting the other day when we spiked up to the 40 and got that big reversal. That was yesterday. When we got that was significant, and because we not only did we reverse off the 40, we went and traded and closed under the 10, but I mentioned this also, we got an STX buy signal yesterday, so we were likely to see at least a couple of days up. And what I'm expecting with this cyan line, which is 21 period moving average, it's trying to cut through its first derivative right now. In the next 2 sessions, I expect it down here, down at this indicator here, I'm expecting this thing to turn up here and cross through its first second derivative, and then I'm expecting that the PPM 3 way down in the bottom is actually going to start to turn up. This slope here, and we have a plus 15 on the PPM 1 here. That is not really enough to really turn the market, but it could over the next couple of days if we're able to stabilize down in this area. So let's take one more look at this. I want to dive deep into the Nasdaq here for a minute, because what I see happening here, if we just start to look at some of the let's look at some of the Fibonacci relationships here real quick. Let's just look at it from a calculator viewpoint. So we're going to pick the high lows in this pattern. And so this might be a little hard. Let me you should be able to see this. The relationship here on the downside is this 12,006.60, 12,626, 12,743, 50%. So we basically did a 50% retracement so far off of this last little rally. And what that really means is that what we're seeing hang on one sec. What this means is that the patterns that are setting up here are very symmetrical from that standpoint. And I'm going to show you from this, I want to draw one more thing in, and I think I will have completed my point here. And this is what I see. And when you're going through daily analysis and walking one bar at a time, you're trying to figure out this. What I'm doing anyway. I'm trying to figure out these patterns on a daily basis. What they do is they unfold within some kind of sequence. Sometimes I'll talk about a 5-3-5s, 5-3-3s, different patterns. And in this case, we've basically had 3 days down. Yesterday was a reversal pattern, meaning outside bar, and it's significant. If we close lower, it will signal that at least maybe 2 to 3 more days on the downside. But it looks like to me if we should finish positive. We got what a little bit over a half hour to go. So this will negate this reversal pattern, and most likely I'm going to show you what I think is going to be next. Okay, and I agree. Somebody said, this buying the dips on the Nasdaq is probably a good way. I'm sure our good friend Kathy Wood is begging for that as well. So what we're looking at here, though, this convergence of these two moving averages. This is on the 10-period moving average and the 21-period moving average are on a collision course, and there's going to be a crossover. The crossover is inevitable because we have just what I was describing. We have an upward slope 10 and a downward slope 21, and you can see right now they are 12,878, 12,944. So the one that's 944 is coming down. The one that 12,877 is going up. So sometime even Monday or Tuesday, you're going to cross over on that. And usually what that will portend is that will start to show that there's a pattern setting up. Now I'm going to draw in a pattern that I think what I'm seeing here. Okay. I wish I had the time just to do live streams every day. I think the problem with live streams is they're too long. And the nice thing about the 12, 15-minute videos, it kind of forces you to be a little more concise. So here's what I see coming off here. And in fact, what we're seeing is this is a right shoulder setting up here. So you got the old cup and handle kind of configuration. And the next move should be up. And this is what I've been talking about. Somewhere we're going to come back and retest these highs that were made back in February. But there's a lot of work to be completed here. Probably at least another couple, 2-3 days to set the pattern, and we're going to have to continue to hold some of those numbers. So one of the things that you're probably looking at, I wish I would have paid a little attention. I would have written down a couple of numbers for reference because I didn't really pay close attention. But if you look at the reference point, if you look at this pattern here, the low that we made early March and then this high here, and look at the retracement values of this thing here. As long as we stay probably above a 0.618 retracement, we did a 50, but I'll just put the numbers out there, probably a 0.618. I don't think we'll go super deep, which would be a 0.76 or something like that. I think we'll set up a pattern here, and we may have already seen, if we get to higher close, which looks to me to be a high probability today, we're going to see that then continue to set this pattern more into motion. And what we should see, especially if we could close up, let me clear this off because it freezes my screen when I'm using this. What it's setting up for is a retest of this 13.2 number, and once that happens, then we should be on our way heading back toward some of these other numbers, and that all-time high 13,890 on the futures, that's going to be the number that's going to do it. Once we close over 200, start to see some upslope in this pattern, the market grid will start to turn up. All of these things are going to happen, it looks to me, and then we'll get all the moving averages to turn back up again and start to make a a decent run at that 13.8 number, which is the ATH, which is all-time high. So if we see those kind of patterns setting up, that's what I'm looking for here in the Nasdaq. And I see people, you know, I I'm not really addressing, like I talked about this on the live stream the other day, and I actually you I like the back and forth. I like to see some people not agree with me because it brings up some good points a lot of times. That's why we need to have a continuing discourse between all of us on whether what you believe and what you don't believe, and listen to other people. But sometimes there's some really good points outside of the little squirmy trolls that like to uh, point out stuff and try to attack you. I don't care about those guys, but I do like to hear and see some of the stuff there. Sometimes some of the comments just confirm to me how right I am. I love the community from that standpoint. So yeah, so let's take a look here. Let's go to a weekly just for a minute, and then we're going to go to interest rates, which is what it's all about right now. Okay. Yeah, let's flash over to the futures. Yeah, they're down 5. We'll see. We'll see how this thing closes. That's what I'm interested in. See what kind of, if we can get some selling into the close. Somebody just mentioned that. Um, we'll see how this sets up. To me, this looks like we're going to try to rally a little bit here again. This high over here, what was that? 18, 19, probably get challenged again, but we'll see how it plays out. Um, so as we go to the weekly, this actually becomes even more, because if you go back, I believe it was Monday's video, I talked about the key level 12,700 is the 21-week moving average, and that's right where we went. We traded above the 10, and we traded just at the, let's see what the values are here. 21, 12,700. The low for the week, 12,681. Pretty darn close. And we're still trading down at the lower end of this range for the week. There's no doubt. And I mentioned that I thought we would be slammed between the 10 and 21 week moving average. Look at the range here, 287, R1. I remember talking about, R1, S1 is how that lined up with the market grid. So R1, 13,154, 13,287. So we got in between R1, R2 on a weekly. And I think everything I just talked to you about on a daily sets up perfect here on the weekly, because the ranges are going to contract just a touch as we come into Sunday night's video. I'll be talking about how the grid just kind of the volatility is going to touch down just a little bit, so we could get the grid to just narrow a bit, which is normal in this type of pattern. And it, like I said, there's multiple days. I think that next week will be a pretty interesting week when it comes to these indices and whether we hold this. And I mentioned also in last night's video that I feel like that what we're seeing here is that critical test, and that move down on the S&P down to 21, down to 38.88 was that's significant. So we'll see how everything plays out here. We're trading 21 again. Yeah, we'll see how all this plays out. There's a bit of a discount on the futures because of the action that there was yesterday. But anyway, let's go to interest rates, because I think this is really important. And I just want to come on screen here for a second, because one of the things that is I pride myself in my interest rate forecasting. I've been doing that for the longest, going back to mid 1983. That's I was primarily a bond trader from 83 all the way to 90 roughly, and then I reemerged in 95, 96 again, and spent about 3 or 4 years actually consulting some of the largest trading rooms on the planet. So that's where that's my wheelhouse, as they say. And when the 2007, 8 rollover happened, that was perfect because mortgages was an area that I spent a lot of time working with mortgage pipelines and all that stuff. So interest rates are important to me. So let's go. What I want to talk about is I think the Fed is starting to show two things, is that they're willing to let these rates run a little ways and just see where they're going to go, and they're not doing the intervention they thought. And it was interesting because Powell, somebody asked him about Operation Twist, right? This is an old strategy by the Fed where they target different maturities. And he acted like, well, we like our strategy. We're buying X amount. You know, they're buying roughly $120 billion per month, 1.4 trillion per year, and they're doing 40 in agencies and 80 in treasuries. And you can bet that they are targeting maturities, and you see it happening because I'm going to go through and show you on the yield curve here in a few minutes exactly what's going on. And you know, this is going to be really what it's all about because markets are watching this. There's some nervousness about the rates, and they hit right into the range I was talking about. But let's go back to talking about the Fed and the Treasury and spending and all of that. And I won't go very deep in this, but you have to wonder something. You know, there was I saw a press conference of Biden talking about anybody making more than $400,000 is going to pay a higher rate. Let's face it, this country is no longer being funded by tax dollars. It's MMT, right? Modern monetary theory. They're just creating the money. They just did 1.9 trillion. They just create the money and spend it. So what do they need taxes for? The only thought that came is it's a punishment for being alive, right? Because they're not doing anymore. They believe in MMT. They started it a year ago, and that's what's really funding everything out there, including the stimulus checks / universal income, all of that stuff, right? So they will continue to obviously borrow money and do things, and this treasury market is so huge, it's crazy. But what I want to point out here is that the Fed appears to be ready to let this thing run a little bit, and let's see how steep the yield curve can get, and maybe they're targeting. I'm just looking at my screen over here, that the 13-week T-bill is down 0.08. It's down 266%. All the short end of the yield just collapsed this morning. And it's interesting because that's where the Fed's focused, on that very short part of the market. And on the long end, you know, we're obviously seeing some solid strength. And I'm going to go through the charts here in a minute, but I just want to make sure the concepts are understood. But the bottom line is that what the Fed is attempting to do is let the markets take back over. And I made in Wednesday's live stream, I showed that everything they did last year, they filled the gap perfectly. You know, you can say everything you want about them and everything, but they plugged the hole last year when they shut everything down. They went and bought all those assets. And like I've talked about before, all they have to do is say they're going to buy the assets. So think about it. If somebody, and hindsight being 2020, right? Everybody should have known that this was the easiest trade on the planet, because the Fed said, hey, we're going to buy and support the market. And they filled that gap. But something else happened, is if this is what I call the Warren Buffett trade. Buffett hasn't made a trade on his own for 20 years. Okay, he's done every deal with, like, if you look back at 08, you'll see those Goldman bonds and some of the other stuff that he did. He had 100% backing of the U.S. government. They told him, Warren, buy these bonds. They're convertible. Don't worry. We'll make sure you don't lose any money. How many of us can make money? if we had that guarantee. Well, that's what the Fed told us last year. Is they said, hey, don't don't worry, we're going to buy all these bonds March 9th last year, a year ago actually, just a touch, uh, just a touch over a year, and that's where everything filled in. So I think what's going on, I'm going to talk just for another minute or so about the Fed, but I think what's going on here is actually very significant, and what we're seeing from the Fed, we're seeing them start to let the markets take back over. They're back to jawboning and basically trying to talk about what they're doing so the marketplace will take care of it. That's the way it's always worked. I've been through, I think, 5 Fed chairmen, going all the way back to Volcker came in right after I started in the markets in 1979. Okay, so I've been through all of these guys. Went through uh, Volcker, Greenspan, Helicopter Ben. Then we had Grandma Yellen, and then here we are with Jay Powell. So I've been through all of these guys, and they're all the same. I don't know if you folks follow me on Twitter or not. It's Twitter/portfolio expert, no E in expert. And I put out this. Somebody posted, I think it was John Nigerian, posted a clip of all the Feds like singing and smiling. They had the same expressions. It's so perfect because that's what every one of them have told you, the same thing about SLRs and everything out there. So this is what the Fed is trying to do right now. Is they're trying to let the market forces take back over and let it go where it will go. If the 10-year wants to go to 2%, they're going to let it go there. And I think what will ultimately happen with the equity markets and everything we're seeing, we'll see some stabilization here, and there'll be a kind of sigh of relief, and we go, oh, okay, I see what's going on. This isn't something crazy. Now, what would blow up that scenario would be that there was a spike in yield, and yields went too fast. So we're sitting here at 175, and they blow up and they go to 250, 320. 320 was the last major high in the 10-year after the taper tantrum. So at that point in time, then it will force the Fed's hand to start to do some things and maybe raise rates and do all that. So there is that potential. There's no way to predict that, I don't see. But it appears to me, just looking at patterns and everything, that that's a possibility. So let's go and take a look at the treasuries now, and so we can get a bit of a look there. We're at 1.73, and this is the weekly, and this is a chart I've been talking about for a while here, actually, is that this uptrend that we have, and I know I see a lot of familiar names and handles. So this is something I just want to unpack this for a minute, because this has a lot to do, and I'll probably cover this and yield curves here for just another 10 minutes, and then we'll focus in on the close of the market. But this is something I talk about a lot, this trajectory of these moving averages. And so moving averages, because this is weekly, right? So one bar a week, there's going to be multiple weeks, maybe as many from here as another 4, 8, maybe push us into May, even June. This thing's going to remain. This is going to be this red line I talk about a lot. The 10-week moving average is going to be the demand line. If you look over on the far left, you've got these PPMs they're screaming 4.92. So what that is the 10-period moving average is rising at 5% per week. And the probabilities it's way below where the market is. It's down in the 150 handle. But the probabilities of going below that average is like nil. One, because it's way down there, but the next couple of weeks we're looking at 5% per week, and we're in that maintenance mode I've talked a lot about on these PPMs where they're just going in this sideways. And what's interesting about the Treasury is that it's sideways, but it's still building momentum. So there's some crazy momentum here. This the only type I've seen momentum like this is maybe in Tesla or something like that. So these are big numbers. So ultimately, I've talked a lot about this, is this 1.98 is the magical number. This is the 20-week moving average. It is coming down slightly. So I'm estimating that by the time this 8, 10, 12 weeks go by, we're going to be at the 188, maybe 178 to about 184 range. We'll see how that number plays out as we go forward. But the interesting thing about all this is it looks like that is the destiny of the 10-year is to go to that level. Okay, so that's what I'm talking about here as far as the treasuries go. You can see we've just been moving higher. This is what, 7 weeks. We've got at least one more 8 weeks. We maybe get this as coming out of a 5-3-5, 5-3-8 pattern. So we'll probably get some hesitancy in the next week or so, and that is going to wrap back into what I was just talking to you about as far as the equity markets go. That's going to set the tone for more upside on the equities. Yeah, so I see Red Rocker's talking about going to 2.14. I think the treasuries are actually going ultimately the 10-year to around the 2-3 number you suggested, but probably 2.25 to round it off, 2.5, and ultimately let's go over and let's talk about that because that's a valid comment here. So the 40 month moving average is at 1904. The 200-month moving average is up at 2.82, and this is the number I was just talking about here, which was back in 2018. We got to a high of 3.23, call it 3.25, and that's your point. So if we start to look at some Fibonacci retracements of this, let's do this really quickly. Let's do that. Let's just put the lines on the page here so we can see it. Let me move the labels over to the right here. I'm going to zoom in on this so you can see this a little better. These colors I've chosen for these numbers aren't very good, but right now we're almost at 1.81% is a 50% retracement from that 3.25 level down to the lows here. So we're getting pretty close. 0.618 is above the 40 period moving average, which is at 2.15, and then ultimately 0.76, 2.57. But we're going to continue working this grid. What's happening here, and this is on a secular level, this is important to understand, is that this is even a bigger trend than what we're talking about on a weekly. So PPM1 as a plus 0.1293. You can see this big spike here. What that means is this is monthly, sometime in the next 2 months, we're going to see a crossover of the 10 over the 40. Most people think that's positive. It is longer term. In the short term, it usually tells me we're going to stall. We're most likely to stall at this 40 month, which is going to be that 1.8. That numbers I just talked, 178 to 184. If it gets above that, then we're heading, we're definitely going to somewhere 198, possibility of going up to the 215 level for sure. Yeah, listen, I would really appreciate if you guys didn't promote people on this channel. Okay. Uh, oh, maybe that. Oh, you're just talking to somebody. Okay, cool. Yeah. Anyway, yeah, I just want to point out that that's important to understand from that standpoint, and I think that's a good point. What time we got here? We got still got 13 minutes to go, but let's go to the yield curve for just a second here, and primarily the 530s. That's one I've been watching. We actually made a new high the other day. The fives, and as I mentioned, the short end of the curve is gone up quite a bit. Let me zoom back out on this. So what you can see on this is a huge trend. We did print a new high just the other day. This is the daily spread. I'm going to go out so we can get a little better perspective and convert this over to a weekly. This is way more significant to look at because now we're looking back on the better part of a year. And this area right here, let me draw something in because I think this is important from a yield curve standpoint. I think that's important. Yeah, I will do that for the closing prices. That's a good idea. Yeah, and we'll do crude oil right after this stuff. But I want to finish this yield curve. So you can see on a yield curve on a weekly basis, this is the highest level it's been. But I want to draw in something very quickly. Okay, so this is where we were talking about. This is right now. See, this is 2019 right here. Here's your 2020 level on the yield curve basis, and it had already started steepening. If you folks are following me, I used to do a weekly video every week. I've actually done a weekly video since 2014. Primarily, we used to do something on Ustream, not YouTube. That was our channel, but it was just for our institutional clients. But this here already started way back in July 18. Then we get this consolidation. Now this is the second phase of this, and I'm going to show you a monthly graph so you can get a nice long-term view of what's going on here. Okay, so let's clear this out and let's go to. So now this brings in perspective. This is where I'm putting a crosshair. Let me draw in some things here, and we'll finish that, and we'll talk about numbers on the close here. So this is 2006. Yield curve was very, very flat. And then coming into, this is 08. And then this was 10. This was the European crisis at this point here. And then this is where the Fed was aggressively pushing this yield curve down. So now I'll run the numbers here, but we're probably about 50% back here at these levels here. We're most likely going to move. We've got a ways to move, I think, before we really start to see anything significant from the yield curve standpoint. I think the Fed, this is my whole point of what I was talking about a minute ago, is I believe the Fed really wants that to actually happen. They want this steepening to get back. And this is, if you look at from 06 to 09, this is the very frothy or the flattest, the steepest that it got. So then, and then as we flattened out here coming into this year, now we want to get back to this steepener and on a longer term basis. So, sorry about that. I'll get to the right screen. So let's take a look. We've got Some selling coming in. We got about 8 minutes to go. We'll focus on the close of the futures here and just take a look and see if we get. We did print up while we were talking. We did get back to the 17 level, and now we've sold back off into as we're coming into the close here. We got about 8 minutes to go. We're getting a little bit of selling coming in. I want to see. Unfortunately, I don't have the cash on this page. Bear with me 1 second. I want to SPX at 39.19. Okay. I just want to put this on the screen. I think I can get it so it won't go away. Yeah, really quick here before I move on. The SPX weekly, it feels like we've been in some kind of weird catastrophic stuff. If you look at it, we were actually able to make a new high this week. We're going to close higher. So let's talk about some of the numbers that are critical. The last week's close was 38.11. So here we are. I'm on monthly. Sorry. I thought that looked too good to be true. Okay, so last week's close was 39.15. So we're basically at 39.20. So slightly higher. I just can't get it right, folks. I apologize. Now we got it right. Last week's close was 39.43, so we are lower for the week, about 20 handles, and we are remaining above the 10-week moving average, 38.57. As you know, the low this week was 38.86, which was printed this morning, and this is the SPX. So as far as a daily number, I'm okay actually with any number SPX above this 10, which is above the low of the day. That's an okay number. We may see a retest of these values, 38.60s, 38.55s in that range. We may see that retest, but the PPM is up at 0.25. It's only a 0.4, a 40% probability of closing below 38. Let me just see what it is. About 10 handles be about 38.66. So there's less than a 40% probability of closing below that number next week. So I suspect we're still in this, and I talked about this on the live stream the other day, the weekly charts are in this slight upward slope here. So you have 5 minutes to go. ES is back at 39.10, so catching a little bit back in, not a lot. But yeah, so that would be the critical number there. On the NASDAQ, last week's close was 12,924. Right now we're trading 12,863, so it's about flat on the week. And like I've said, I think this 21 period moving average is your key level, 12,701. It was basically the low of the day. So these lows that we're setting today are going to be critical coming into next week. And with the numbers like they are, I mentioned this earlier, I expect the market grid to contract a little bit and actually be on a weekly basis should be, the downside will be limited. Even if we printed through this, I'd still be looking for a bounce, especially with the PPM2, which is the 21, is up at a 0.45. All right, let's focus in on the last 4 minutes here. So we're 0507, so we're still drifting down into the close here. Futures are unchanged on the day, just went negative. So this will be critical here. from the standpoint of, for me, that this is this this close is fine compared to after being down at the 875 level and being on unchanged here. We'll just see if we get a lot of selling or not. So we'll hang out and watch this stuff. Yeah, Colin, Harry Dent has been um, calling for a crash, I think, since I don't know when, for the last 10 years maybe. I mean, that's all he, that's what he sells. He sells um, doom porn, right? That's what he's selling. So, um, and as far as um, Michael Burry, don't know. Schiff is a loser. He's never right about anything. So, but here we are down one on the S&P. At last 2 minutes of trade here. See what kind of selling. Volume's really light here. There are some pretty good sellers coming in. We got about, there's a seller hanging out just a couple bids above here. They just took him out. Yeah, here he is again, about 500. They took him out again, so he may learn his lesson. So we'll see. We're down to handles. I'm going to flash back and forth. I just want to see where the cash is. 1583. Cash just went negative as well at 15. I don't see this as anything really bad, but I think a lot of folks are squaring up. Here we are now down 450 coming into the close. 01. This is the final minute that we're watching. Evens trade. Yeah, so what I look for here on the close is just see if there's any kind of, what the action is, and see, especially right now, a little bit of a bid showed up. We printed, I think the number was, it was 9 even. That's how I thought I saw the 9 evens. So it's just bouncing around here. Here we go again. We're trading 9 evens again, and if you think about it, I've talked a lot about this 3,900 level. It's been a real barrier. Uh, Here we are, 850s, big, there it is. There's the close. So that is the party. We printed down to 8 even. And now we're back at 89. So what I look for here in the next minute or so is to see if there's any buying back. There's a little bit. So a lot of times what happens here on this type of action is you're seeing some of the squaring up of mutual funds, institutions are squaring books over the weekend. And also we've got, we have expiration, which has already happened for the most part, but we do have that influence as well, maybe unwinds of some of those trades. So yeah, so we traded down just, from here, from the 17 level all the way down to, we dropped 17 handles into the close. And really just, the best I could tell is a squaring of books, but we're managing to hang around there. So let's do this. Let me change screens. And yeah, Burry was last late by what? 2 years, 3 years? That's okay. If you're playing real estate, you play that game in this market, it'll cost you a lot more money. Real estate doesn't get repriced every day. And the mortgages, I guess you're right if you just look at the mortgage trade he did. Yeah, so hey, listen, it's always popular. It's always popular. I've been around a long time. Every time the market makes a new high, everybody's always predicting the crash. I don't see it. Everything I'm telling you is all of the major trends are up. I went through this earlier, went through it. If you want to watch Wednesday's rebroadcast, I went deep into all of the indices on Wednesday, and nothing's really changed from that analysis, especially looking at intermediate, long term. So there's nothing's changed here, and these trends are seriously up, and they're not going to change anytime soon. And so you also have to realize, and we see this in news and markets, is everybody wants it. It's not always about being right. It's about being first, right? I said it. I told you back in so and so this was going to happen. There, these guys, especially Peter Schiff, he's like, oh my gosh. I mean, don't get me going on that guy. But he's the classic where he thinks he's smarter than everybody. All you got to do is see how smart he is. Look at the returns on his mutual funds. They're terrible. They're like, I don't even know why anyone puts money in them. I can't figure it out. Anyway, so, but yeah, so, but no weight on that at all, or it doesn't matter. I mean, Ray Dalio was telling us we were going to be in a depression worse than, than 1929. He's quote unquote, the air quotes, he's the historian. Um, you know, I advocate something that I think is important to understand is that the markets are similar but different. And what I mean by that is you have to look at the circumstances. In 1929, we didn't have digital assets. You couldn't instant transfer capital from one account to another. You couldn't do the things the Fed could do right now, open up the spreadsheet, put zeros on, all of a sudden the money's available. You couldn't do those things. So this is why, and Peter was right, if it would have been, not Peter, um, uh, uh, Ray Dalio would have been right if it was 1929. But that was my argument. It's not 1929. I had to speak at a conference in Mexico City in 1987, 3 months after the crash of 87. And I started off that speech saying that I checked my calendar. It is not 1929, it's 1987. Let me tell you why the market's not going to continue to collapse. And it's the same scenario now. You can't compare, you can't trade or make decisions based on looking in a rearview mirror. You can look at those events and look at similarities, but you have to understand the ability for the marketplace to react is different. And we learned all this stuff, by the way, from Japan. They've been doing this stuff for so long. They are the masters. They're the samurai of financial markets, right? They have been doing quantitative easing and engineering their markets since pretty much since the 90s. And so that works. That model is what people are grabbing onto. As I said earlier, why do they even take taxes from anybody when they're just MMT is going to pay to run the government? So you have to kind of wonder if that's how it's going to work when we just make up money whenever you need it, and you let the economy, let GDP be 100% flowing into the economy, and then you just pay for the government through MMT, right? And you can make it do whatever they want to do. That's always the case. So yeah, so I just I guess in closing, let's do a couple things here. Why don't you guys, if you have any questions you want to ask me, why don't you do that? And I think I told somebody we'd look at crude oil, and maybe there's not a lot to talk about. I covered gold so much, I won't touch that. We could take a look at Bitcoin maybe. We'll do a couple things here, and then we'll call it quits for the week. Yeah, I have met Peter. Okay. I have talked to Peter. Okay. So we'll leave it at that. We'll just say we decided to agree to disagree just about on everything. So yeah, we can do a couple of these things. Like I said, we'll spend some time go through this. I don't think much is Yeah, I'm just looking at, yeah, I guess is what is that? JJW? Yeah, a lot of times, I'll tell you, being an analyst and looking at stuff, it's very simple. You just pick the guy that's always wrong. One of my old mentors used to say something I thought was interesting. Is that he used to always say back in the days when brokers were soliciting and dealing with those kind of people, if you have, in this case, analyst Harry Dent, if you got these guys that are always wrong, they're the best in the world because you just have to fade them, right? A buddy of mine used to say, well, open two accounts. Open a small account with the guy who is always wrong, and you open another account and you fade him on that account. I'll tell you a quick story. I had a guy that was a customer of mine back in the 90s, and this guy was always wrong, and he would panic. He was a fairly wealthy guy, and he would go, Bob, you got to put the trade on for me. I'm bringing a check over to the office right now. And I'm like, I can't do it, and a guy come in, he's just hyperventilating to buy or sell, whatever it was he wanted to do. It never worked. It was the perfect trade to fade. So, there's a lot of that stuff out there that you see all the time is that um, that exists. So let's do a couple things. Yeah, we'll look at Apple and yeah, Peter is always wrong. Yeah, that's pretty funny. All right. Yeah, let's do a couple things here. We'll call it quits and call it a week. It's cool. We had a lot of folks hanging out twice this week. I actually love these live streams. They're a lot of fun. I really gives me a chance to real time interact. I wish we could have like a polite. I did this once. I talk about it. Maybe I'll do it again. I'll try it. And it was actually really good. I opened up a Zoom meeting and posted the link and just did it audio only. So maybe we'll do that because I'd love to hear what some of you have to say. There's some really great comments on the channel. So let's go ahead and take a look at a couple charts here, and I'll buzz through. I went through a lot of these in great detail on the stream the other day, and this is Apple. Let me clean up some of this. This is Apple Weekly. But once again, 40-week moving average is going to be key on this. PPM 3 is a 0.76, so you can buy Apple against 117. I guess it had a 119 low. This is weekly, so you want to be able to buy this. The last 3 weeks, all of these market grids, for the most part, on a weekly basis, are going to contract a little bit. So let's take a look at the short term here. Yeah, so you've got, it's similar to some of the other charts. You've got Apple's got this downslope here. You got PPM2 at a minus 0.38. So this will be keep a lot of pressure on the market. 119, 121 is capped out, and here's that 200-day moving average is probably going to be a reasonable point to play off of if it gets down there, which is right now 116. So that's at 116, 117 level. Let's do Softy, Microsoft. Here's daily, same kind of pattern. A lot of these tech stocks, and this is what I was saying. There's some work to be done on the Nasdaq and everything to keep that up. And by the way, the Nasdaq is going to close higher, so it's negating that outside downward reversal that we saw yesterday. So Jay, I see you talking about Mad Max. Is that thing? Uh, is that the one you own? I'm just being too personal maybe on this. Yeah, folks, hit the like button. I don't have any view of what's going on there, but let's Softy's the same thing here. We'll go over the weekly. I mean, a lot of these tech stocks have similar setups. 21 period moving average is going to be the magic number there. Let me just get that on screen here. That's 213 ways down. There's a fair amount, got a reversal here. So this is going to keep what I was talking about. I'm going to tie some of these stocks, especially the NASDAQ stocks, that we're going to continue to see some grinding and sideways with some slight downward bias while we set up this final bottom. If you were hanging out when I was going through the NASDAQ, then that's an important thing to understand, because that's going to take at least another maybe week or two to really set up the NASDAQ bottom, and then we should be challenging the ATH all-time highs at some point after that. Okay, Rogue Wombat. I tell you, you folks are missing it not being a WaveTech subscriber. Jay has some of the best names for portfolios ever. He's been doing this stuff for a long time with me. I love the stuff he comes up with. Who could come up with the name of a portfolio like that? Rogue Wombat. Thank you, Richard. I appreciate it, man. I really do. So let's take a look at it's serious. I mean, yeah, you would almost had 2 days of WaveTech for that money you just spent. I appreciate it. I really do. But you know, you guys are missing out on a lot of good stuff here. Really am. Okay. Let's do yeah, we'll look at the miners here. And you guys know, I think there's a big bottom setting up in gold here, and this is probably, I think, the best way to play sometimes the gold is going to be in these miners. So this is a good place to look here. But we're back above the 10. The downward pressure on this thing is still substantial. So there's a lot of work to be done here yet. Yeah, it's going to take about 3 to 4 days of stability. You know, gold traded fairly good today. You know, we ended, where'd we end up at? I think up 9 or so last time I looked. Yeah, up 9.5 at 1742. That's actually a good number. We should move on gold up to 1760, 1780. But from this standpoint on this stuff, that should be enough to stabilize this thing for the next several days. And the PPMs are starting to turn up, so we're close to a turn on this one. So that's a thing that looks good. There was something else. Let me do crude oil, because I haven't talked about that for a little bit. Let's look at crude, because crude is this is a weekly crude that I've got up here. I'm going to smash this down just a little bit. Now I want you to see what's happened here. If we go back to 2020, this is, in my opinion, very, very interesting, because if you look at 2020, you see the collapse. This is the thing I was talking about. This whole area, everything under this 200-week moving average, that we were trading above it before the crisis happened. We're right back above it, and I'm seeing stories. You know, I didn't really. I was showing Jay the other day. I have a portfolio I built in WaveTech called Short Squeeze. And that short squeeze portfolio, I built that way back in January, did 250%. It's like take profits, go on vacation, right? 250% in 1 month. We were talking about just the other day that I remember we had an old user of our software back in 1999 that made 179% in 1 year. Well, we're talking 253 in 1 month, right? It's given back a little bit because it did have GME in there and some other elements, but there are things that I built this back and way back, I think in December or something like that. But it's kind of interesting to see this. But this is what I'm talking about here. This chart here had basically crude oil has come back to normal. So we're starting to see those demands. But I talked about this in my video where I was talking about shipping channels and all of products that are just backlogged. Everything on this planet is moving as fast as it can right now. Trucks, trains, boats, everything. Demand is through the roof. And you bring on the U.S. economy a little bit more. Europeans are going crazy over there. I don't know if anybody's on here from Europe. I think I saw a couple of folks that I know. You know, it's just crazy. It sounds crazy over here. I actually have a good friend of mine that I talk to all the time in Switzerland, and he's always telling me his perspective of what he sees, and our perspective of what we see appears to be really kind of kind of crazy. What's going on with France and locking down again, and it's really crazy. You know, wow. I really want to be I really want to be beyond this stuff. I'm sure everybody does. But this chart tells us that we basically come back on demand to that level. And I think a lot of it has to do with the shipping channels, with the demand. You know, there's not going to be electric boats, okay? Not at the moment anyway. I don't know if I've not even heard anyone actually even talk about that one. So, but the bottom line is this is showing that it's recovering. So let's go to a monthly graph and I've talked about this. It seemed crazy several months ago. I was talking about crude oil going back to 65 bucks. It seemed absolutely ridiculous. Well, the long-term stuff, this is going to be a lot of resistance right in these levels right here around 75 bucks. I think it's going to be tough, but we're pushing on a monthly. We're pushing the 40-month moving average, and we look at the ppms here. I'm going to do just something here real quick because this is a good perspective on the ppms, and this is important to understand how these indicators work. So here we have these moving averages coming through here. The ppm one has turned up, and we're about, I'm going to call it 2 months from the 10 penetrating the 21, which is going to suggest we're going into a sideways range. Probably going to work the market grid on a monthly basis. I'll show you what that is here in a second. And it's not going to change a lot for the next couple of months, so you can write these numbers down and be able to trade around these numbers on a longer term basis. But this is what I want to draw here. I talk a lot about this, and I'm drawing on the ppms on here. I'm drawing these in because what we get, I talk about this, it's you get the momentum first, and then you get into this maintenance mode. So all of these ppms are going to start to do something like this. And I'm just drawing in some quick, and then what's going to happen is they're going to go into this maintenance mode, and every one of them go into maintenance mode at percent levels that are going to suggest that these moving averages could all three turn up. If that's the case, then this is a nearest futures chart. So this is there's some discounts and all the backwardation and everything's kind of put in here. But this does easily suggest that we're going to see some of these longer term numbers and probably even get up to this $110 a barrel again, which would be crazy numbers. But I just think this thing, what we're seeing here is the demand going through the roof, and and then we're seeing some of the U.S. capacity being scaled back for somewhat obvious reasons. you know, this planet is not going to be solar powered tomorrow. It's not going to be wind powered. It's not going to be all that. It's going to be powered by this stuff for a very long time. You know, well beyond my lifetime and beyond probably everybody on this call, is that there will be fossil fuels driving a lot of stuff on this planet for a long time. What likely has happened is somebody's going to figure out how to make it burn even more efficient, which actually has already happened. So that's not the a lot of the fuel sources aren't, they are pollutants, but they're not as bad as sometimes they're played up to be. But this whole momentum on this is substantial. Okay. Yeah, you're right, Jeffrey Harden. It will drive people away, but there's just some things that just aren't going to run without it. That's all there is to it. And you know, it's just going to happen. You know, I'm one of the biggest fans of Elon Musk. I think the guy, I mean, it's brilliant. I just love listening to that guy talk, especially when he's pounding down the trolls and people. Yeah, I love when he's being interviewed by people that couldn't do anything but maybe talk. Uh, so couldn't create anything, right? So yeah, you know, that's interesting. JJW, not I'm surprised as well about China not being oil there, but the so let's just I'll come on screen for a few minutes. Just thank everybody again for showing up and hanging out. We got 500 people roughly hanging around, so we it was uh, it was good. Yeah, I think listen, I think hydrogen. I think there's a lot of alternative fuels that will come into play, and but the the old fossil fuels are going to be tough to get rid of, and just for certain things, there's some machinery that's just got to have the power it can generate, and who knows, there could be a breakthrough tomorrow. I'm certainly not saying that electric cars and all that is not a thing. I believe it's a very big thing, and I know a lot of folks are going that way, and you know the hardest part is now, you know what I'm laughing about? I'm waiting for somebody to build like a portable generator that you can charge your Tesla on with gas, which is really funny. I'm surprised somebody hasn't done that. But anyway, no, listen, appreciate everybody again. So it's the weekend, thank God. I mean, it's been a heck of a week, and it's been a good one, but it's been really busy. And look forward to Sunday night, and hopefully I get all the video stuff. The lighting I have right now is not the new lighting; it's still broken. But yeah, charge. You're right. Charging your phone battery is annoying enough. Solar cars, yeah. Who knows, right? Uh, I can tell you there's places on the planet solar cars won't work very good. Yeah, the Chevy Volt. Yeah, how funny, huh? That's what I was thinking, Marb. A trailer generator for your Tesla is perfect. Tell me that's not good. You can get one of those small generators that will do the 240, right? And just find a way to attach it on the back. It's pretty funny. Yeah, thanks, guys. Appreciate it. Yeah, the Flintstones had it down, right? Yeah, I see that. Somebody just pointed out that the futures are selling off after the close a little bit here. Yeah, we're down 10 handles now, down at 96. So, yeah, like I said, those 88 numbers that we printed, those are pretty good numbers. People are liquidating. They don't want to hold the weekend. So you're seeing that. Yeah, and I agree. I've talked a lot about this. We live in the area. Basically, Arizona is nuclear and hydro powered. That's it. Okay. There's this thing called the Hoover Dam north of us. There's another thing called uh, Roosevelt Dam, hydro, uh, and then we have a giant nuclear plant about, I think it's probably 50, 60 miles out of Phoenix. And that thing's a monster. And so that's the other problem with electric cars. A lot of people are charging them on gas or coal powered areas. So you're still burning gas or coal. It's a little more efficient, no doubt, but you're still burning fossil fuels even to charge your electric car. So until they figure out how to make the the energy, that would be nuclear, and there's been so much against nuclear. I mean, those of you in Germany know all about that, right? So, yeah, and I agree. Nuclear has always been the future, actually. The problem is the bad guys will figure out how to take the stuff and make other bad things with it. But yeah, so it looks like, yeah, the futures are closed down. They're going to reopen here in a minute. So anyway, yeah, hydropower, the thing about hydropower, it's consistent. Wind power is not. Solar is not. If you're here in Phoenix, there's a couple big solar farms. If you take out of Phoenix and drive I-10 toward Cali, you'll see some monster farms out there, and they're good. They're ugly as hell, but there's lots of desert out there. Yeah, yeah, good call. Somebody said, let's do a quick Bitcoin. It's the weekend. I'll bring it up on the chart here in a second. It's kind of interesting because I have an idea. Uh, yeah, hey, thanks, Sam. Subscribe if you would. That would be uh, that would be awesome, man. I do videos every day, daily commentary, all that stuff. So let's go ahead and let's take a look at Bitcoin here real quick. We'll finish on this note. So Bitcoin up 1646. I was joking the other day on the live stream that Bitcoin is actually some days fluctuating more than it was worth at one stage. $2,000 and $3,000 movement today, 1,500. We've seen plenty, but the one thing that's in play here, which should be significant through the weekend, is just, and this is the hard part. So I have a daily a day a daily time frame here, and I was talking to somebody just the other day about this. Is that the hard part with coins, and especially Bitcoin, is if you're going to do a daily graph, that point where you stop that graph, it's a data issue. And in my company, we have spent literally decades studying data issues, bad data, noise in the data, all kinds of stuff. We used to say our four-letter bad word is data around here because it's always alive. There's a lot of things that go on with data that people don't realize. And if you talk to anybody, if you went to the back office at TrendView or TradeStation or any of those places, and you went and talked to the guys that deal with all the ticks and the data and all that stuff, it's pretty intense environment, believe it or not. But the hard part with Bitcoin is finding that point to reconcile. This chart I'm showing you right now is reconciled at midnight Eastern time. And so that's when it rolls over. That's when the market grid. But this 10-day moving average you'll see here on this chart is upsloping here is at a +1. That is going to be the number. So a simple 10-day, if you can get to that, I'm going to go down to like I'm just trying to, I'm going to see if I can customize this. I haven't done this for a while. Um, Yeah, I don't know how to do this. So all I'm going to be able to do is to go into a 60-minute graph, and uh, this this here you're going to have a couple elements. This 200-hour moving average. So you might be able to pull some of that stuff up, like on Coinbase or something like that. The 1 hour. This should be your primary demand line is at 50, call it 57,000. It's just moving up slightly every hour. It's up about $20 per hour right now. So it's a that'll be your major support. But you can even see in this chart that 10-hour moving average has been a pretty good play. We've just been going along that, and the PPMs are not that powerful, but they're in that trend mode that I talk a lot about. Is right here. Let me just show you. So if you've been watching for the last hour or so, you'll know what I'm talking about. But basically, this is how this thing works. You get the momentum. Momentum, it reveals itself. You get into maintenance mode. So all these trends on an hourly basis are in maintenance mode, and they're all in positive configuration. So as long as it just stays flat, we should crawl along this line. Whether we're going to be able to get up and print a new high or not, I don't know. I think there's probably going back to this chart here. We go back to the daily. We're probably going to see this thing, and here's the range I'm going to give you on this is. Yeah, so you're looking at 62,037, 53 is big range. Chances are you'd probably get S1, R2 range where we're at now. 59, yeah, 59, 252, 59, 912, R1. Yeah, so 59 will be most likely. You could get up to 62, 6134 as a range on the downside. S1, 56. 56 should hold pretty good. That's right on that 10-day moving average. So there's 50, what's the exact number? 56,783. So, okay. Okay, folks, that's going to do it. Thanks again. Yeah, so Nicholas, no, I've stopped looking at divergences, RSI, and those kind of indicators back in the 80s. I found they're too deceiving, especially stochastics. RSI is really bad. I don't do anything that has a meter that goes from 0 to 100, and that's it. So stuff like um, you know, rate of changes, different things that are measuring things that don't cap out at a number like stochastics and RSI. So I'd never really put a lot of weight on divergences. In fact, if these indicators that I use every day are the ones that taught me that those type of things don't matter. What you need is they're just what I've done with my life's work. So I figured this out in 1984, 86, and never changed anything. So, okay, I'm just looking at a couple comments. Yeah, thanks, Michael. I appreciate it, man. Yeah, yeah, I'm sure on the Gates thing. Not only that, he wants to control world population. I think he figured out the answer. I won't say the word. It starts with a V. So anyway, all you younger folks, be careful out there, and with what you do. I'm not going to say anything any words that the Agos can pick up on, especially on live streams. They watch these really close. So that's just the world we live in. Yeah, that's a good call. We need to do that next week. Um, we need to go through and look at, like Nifty 50, India, and go through the world indexes. That would be awesome to do. I'm actually making a note to myself on that. That would be really good. Almost maybe even like maybe a monthly review or something like that. Yeah. So somebody, do you test your method via course? Answer is yes. We actually are working on a master class right now, and we'll let you know when that's ready. We got a lot done about 3 weeks ago, and working on the actual classes right now. And one of the bottlenecks at the moment is getting the PPMs and some of the elements that you need to have to actually run the methodology. So thanks, Mr. Tater. Appreciate it, man. Hope you're doing well. All right, folks. I'm going to call it quits. So we'll go ahead and get ready to sign off here. Don't forget, support the channel, like, share, hit the bell, all that good stuff. Also, if you want to support us for $3 at $3.18 a day, we actually have. I don't think we have the special out there right now. It was even less. But for $3.18 a day, you have WaveTech, 16,000 symbols, all kinds of stuff. You can build portfolios, do some really cool stuff with that. And then the next level is the PX thing that I've been putting out on the videos every night. So everybody have a great weekend. It is finally yeah, you know what I was really hoping for. Somebody pointed out that Gates is the biggest land owner in the United States, and yeah, he's good news. He's my age, so but he's got a lot of money. So yeah, hey Wayne, I just want to put something out to you. I didn't notice you on here before, but I want to get Michael, yourself, and Steven. I would like to do a Zoom call. If you're going to be around this weekend, drop me an email. That would be awesome. I'm going to reach out to the other two folks here shortly. Senior citizen special. Yeah, that's kind of cool. Yeah, no burgers tonight. We're doing something different. I think it's a pizza night. Very possible. Yeah, keto is my lifestyle for sure, Mr. Tater. I mean, you guys get to see me every day, so I'm not bloating up or anything. I did In and Out yesterday. It would be nice. That was usually do it Wednesday. Last night was In and Out. I actually didn't know what I was walking into last night. It was kind of a crazy situation because I went from got back to the office around 7:20 p.m. and ended up leaving here at 1 a.m. finishing the video because of all the tech issues that came in out of nowhere. So anyway, folks, have a great weekend. Don't forget to sign up, like, do all that good stuff. And yeah, we do have an annual discount if you want to reach out to us. info@kendallreport.com. Wow, that is awesome, Mr. Tater. That is awesome. We should hook up again sometime. I'd like to find out what you're doing. I think I've got one of the most sustainable diets in my life. I'm down probably right now. I'm probably 30 plus from where I once was multiple years ago. So I found you guys. I'm not going to tell you this, but I have another YouTube channel that we used to run, and the very first, I hate this. I start I, s- I start paying attention, talking to you guys. I don't want to get off. But the very first show that we did in 2014, I found the other day, and we were looking at that, going, "Dang, I've lost some weight." So that's really good. So yeah, yeah, it'd be fun. I think, like I said, I did a live Zoom meeting probably 4 months ago, and just hung out with a bunch of you guys. So on Saturday morning, so um, maybe that'll happen again this weekend. Probably not. Maybe the following weekend. But yeah, so yeah, so just remember the Runa. This one can right here is equal to 3 espressos, and it doesn't give you jitters. So that's a pretty good commercial. It's just this is mango tango. Got a little flavoring, no sugar, no nothing. This stuff will crank it up. Yeah, and yeah, the keto thing is pretty amazing. It's changed my life. It, Eating, like a lot of us, used to always be a problem for me, you know, and it's I don't even think about eating. And I kind of mix keto with with a intermittent fasting as well. I usually go like my evening feeding. I don't eat until at least about 14, 15 hours after that. So that it works for me. So I'm typically under 25 carbs every day. Some days I just go hardcore, almost carnivore, where it's just meat only. I won't even do anything. But we'll talk about this for a minute. But yeah, yeah, we should. We won't make this into this live stream a keto meeting, but I actually have. There's some people on Keto Connect that actually subscribe to my channel. I tried to reach out to them. They've got a really good keto channel. Just a couple. I picked up a lot of their stuff. It's interesting. When I first started keto, I felt the need to have some trying to make breads and some stuff like that, and that's kind of past. I don't do any of that. I went completely off script 2 weeks ago and went to this pizza place, which is absolutely insane, in this place, Old Town Cottonwood in Arizona, and it was like, yeah, it was amazing. And it didn't trigger me back in craving or any of that stuff. I was right back next day into the whole pattern. Yeah, yeah, Richard, that'll that will do it. You're looking at a guy that's done 2 of those. That's pretty funny. Yep, that'll do it. Yeah, you lose at least 30. That's pretty funny. But yeah, so usually 25. Sometimes I'll do a bit more, maybe up in the 50s, something like that. But it's pretty controlled. Get some salads and that'll kick them up a little bit, some stuff like that. But for the most part, it's just I got on a thing where I couldn't eat eggs for a while. That was tough. I just burned out. It took me like 3 months to eat an egg again. So anyway. Yeah, I don't think. Listen, when you just somebody mentioned a cheat day, I don't need cheat days anymore. What I do, hey, thanks, Derek, appreciate that. Uh, but yeah, I don't do the cheat days really. Um, you know, Maybe I did have one of those because I usually when I go to In and Out, I get it protein style, which is wrapped in just in lettuce, right? And I get no onion because onions, they're so-so. But anyway, so that's reasonably low there. But the other night or yesterday, I did get fries, and I only did a half. I literally took them out, threw out half of the fries, so I couldn't eat them if I wanted them. So I knew if I started eating them, I'd eat everything in there, and I did. So about a half order of fries, and I think they're probably 80. So last night was probably an extra 40. That was it. So, but some days I usually do 2 meals a day. I do a early morning and uh, evening around 6 o'clock. And that seems to get me through to the next day. Yeah, Jeff, you're right. Hey, listen, I'm telling you, I have the best energy that I've had in years just by changing that. So that's something good. So yeah, no, what is that? HCL? Oh, yeah, I have some. I'll have to look into that. I have something I take before bed that actually totally. I forget what it's called right now, and I have a natural path that I go to, and he said take one of these. Actually, the full dosage is 3, but I take one before I go to bed. And he was saying that at nighttime, your blood sugar kind of goes wacko a lot of times when you're sleeping. So this will that stabilizes blood sugar and all that stuff overnight. So usually by morning, I'm hitting that 12 to 14 hour period before I eat the next time, and that'll do it. So it's kind of interesting. Yeah. Uh, uh, yeah. So, yeah, I don't really, it's interesting because I think once you get seriously on keto, you actually get to the point where you don't get the cravings. And it, once you get beyond that mental state of whatever it is, and there's so many recipes on the internet, I don't give a shit what it is that you like. You can find a recipe to replace it that's at least friendly. And you have to watch out that that's one of the biggest tricks in the world is these companies put uh, keto on the front, and you think they're good. You got to read the ingredients and look at that stuff. It's uh, not there. Yeah, it's not. Yeah. So yeah, that's good information. I appreciate that, Noya. Yeah, well, I don't know. I have a buddy that says I look like I did 20 years ago. I look a little different, but it works, folks. I'm sorry we got into got going on here, but it's good stuff. It's been, like I said, it's been a game changer for me, and especially just on food in general. I mean, it's just not even, it's not something, I don't end one meal and think about the next. And it, life doesn't, I mean, think about how many times you go out with, back in the day when we went out with friends, right? We go out with friends and you're at lunch, you go, hey, what are we going to do for dinner? You're literally eating lunch and you're already, your mind is already skipping forward. That doesn't happen anymore. So I do plan my nightly meal, whatever I'm going to have, but chicken, steak, and yeah, there's a grocery market that makes these incredibly mesquite hamburgers with cheese embedded inside the meat. Is like that. They're crazy. It's like the best burger I ever had in my life. So those are the ones I cook at home. Anyway, um, yeah, this is. I just want to go back off of keto here for a second. Um, Gianfranco, I think I probably screwed your name up. Um, but yeah, so 1929 crash probably won't happen, but this is the beauty hanging around here, okay? The When we start to see our intermediate longer term database roll over, that'll be amazing. I should show you guys my Kathy Wood strategy. It's still way positive on the year. You know why? Because we sold out of the stocks. We didn't write it all the way down like Kathy. Hanging out with Kathy, 30% drops are hard to take. That was the ARC just crashed. What did it? It actually managed to finish up 1.71 today, but it's a dead cat bounce on those things. So anyway, folks, I'm going to try it again. There you go, hot dog wrapped in bologna. I like it. Mr. Tater, do you remember the bologna sandwiches when we were kids with barbecue sauce? Anyway, all right, folks, fun talking. I really enjoy it. So we'll talk to you real soon. Take care.